Hi, I'm Michael Quinn, one of the directors of the Quinn Group. Today's topic relates to businesses having cash flow difficulties. Experiencing financial and cash flow difficulties can be very disturbing and traumatic experience. What can you do? Well, essentially, there are 5 options available. The first option is to negotiate a repayment plan with your creditors. Now, in the past, many companies and businesses used the ATO as a bank, but the ATO are collecting their debts faster than ever before. And the reason for this is that they've outsourced some of their debt collecting processes to external debt collectors. They're looking to collect GST, PAYG, and they are now especially harsh on companies not paying superannuation for employees. The second option available would be to look to source further funding with the likes of a bank or a finance company. As you're probably aware, this right now is a very difficult area. The banks are looking very, very closely at the ability to repay debt, and they will look very closely at whether you actually have your tax debt up to date. And if you don't, that is a mark against your lending criteria. So it is difficult to look at sourcing further funding with the likes of a bank or finance company. The third option would be to look for outside help, such as a loan from a family member. And this may be a help from a short-term point of view, but you need to be very careful because you need to ensure that you don't trade whilst insolvent. Now, what does that mean? Well, it means that a company trades whilst insolvent when it is not able to pay its debts as and when they fall due. And the problem with that is that company directors can be liable for unpaid debts if insolvent trading is actually proven. So the outside help, such as a loan from a family member, may just be biding time. That's what you've got to be aware of. The fourth option available would be to look to sell the business to clear debt. The problem, I suppose, with this, it is an option, but the problem is that it would entail a fire sale, and you probably wouldn't maximise your sale price. The final option available is the administration or liquidation options. Now, you've got to be very careful here. Whilst often administration or liquidation is the only available option, you need to beware approaching a liquidator without first getting advice. The reason for this is that liquidators don't act in the interest of you, the company director. They're obliged to act in the interest of the creditors. You could find that the liquidator actually commences action against you, the director, for things like outstanding shareholder loans or even insolvent trading. So before even approaching a liquidator, if you have difficulties with your business, you need to get the proper advice before acting. As you know, we at Quinns are tax lawyers and tax accountants, so we'd be happy to help you provide a preliminary overview of your situation, and once we have the facts on hand, give you advice about the best option to take. So there it is. You owe it to yourself and your family to get good quality advice prior to contemplating administration or liquidation or any of the other options available that we've already talked about. You need to see someone fairly quickly in this regard, and we're always willing to help. You can email us, phone us. In terms of emailing, you can email us on info@quinns.com.au. As I say, if you need any assistance, please do it sooner rather than later. That's all for now. We'd love to get your feedback, so please like, comment and subscribe to this channel. I'm Michael Quinn. Hope you join me next time. Bye for now.